This is TradingETFs.com. Today is January 27th, 2016, and this is an ETF update. We're going to go over a few different ETFs here to see where what I'm seeing on the charts. Today, the Federal Reserve came out after their meeting, and everyone was expecting them to be a lot more dovish on this path of raising interest rates. And I did a video earlier today, and I had mentioned that because everyone was expecting them to sound a lot more dovish, that there was a lot of hope in the market. And I had said that I did not believe the Fed was going to change their path. They made a few comments about the economy softening, and they were aware of it, but in the end they really didn't change what their expectations are for the year. And so here, looking at this diamond ETF, the DIA, you can see here on a short-term, the short-term oscillator moved up into the overbought area. This closing date today is after the Federal Reserve released their decision, but before the meeting before the decision was released, this dot here was above here, so it was definitely moving up with the expectations that we were going to get some type of bullish news for the market. That didn't occur. We saw the market reverse and close on the downside. You can see here prices are still consolidating at the lows. And if you recall a few videos before, I had talked about expecting the market to have a couple days of moving up, and all it was going to do was put the short-term oscillator, we would take the short-term oscillator off the oversold level, and we certainly have done that. And by going into the overbought level into the meeting, we definitely have now alleviated the oversold position of the short-term oscillator. And what that's going to allow the market to do at this point is continue to the downside, because the short-term oscillator is no longer oversold. So it's got plenty of room now to continue to move to the downside. And that's fully what I expect to occur. That was on the short-term oscillator. Let me take a look at the long-term oscillator. And we can see in the longer-term oscillator, it really didn't change, or the last couple days here in this rally that we've had, or I can't even say it's a rally, just these few up days that we've had, really hasn't done anything with the long-term oscillator. It still is been going sideways for at least for the last 3 days, still been moving down over the last 6 or 7, but here we are on the verge of continuing to move down. And I do think that we are going to move down and not only close lower than this closing day 5 days ago, but I think we are going to actually finally break it. And what that's going to do is create a quick sudden move to the downside even more. If I extend out the chart a little bit longer so that we can kind of see what the next level would be, we can see we're going to get to September or August lows. That's my expectation, is that we're going to get down here. And I don't think we're going to hold these levels either. I think we're going to continue to the downside. So that's what we have in store for us at this point. Let me switch over to the VXX. Actually, let's take the Spider ETF, the SPY. This is the Standard & Poor's 500 ETF. And again, on the long-term oscillator, we went sideways. We had these up moves, but the oscillator really didn't move to the upside. We've now been going sideways here. And it looks to me like we're going to accelerate to the downside, just like we have in the diamond contract. When I switch over to the short-term oscillator, let's take a look to see. This is the chart that I actually gave earlier today, right before the Federal Reserve meeting, or the announcement came right before the Federal Reserve concluded their meeting. And I had said that the short-term oscillator was moving up on the hope that we were going to get some type of dovish comments. And I said that I think that that's incorrect. I didn't think we were going to get dovish comments. And again, this oscillator was above this previous dot yesterday, and after the reversal to the downside, it now closed below. And so again, we've alleviated the short-term oversold reading and the short-term oscillator on the SPY, and my expectation is that we're going to go below this closing price here that occurred 4 or 5 days ago. And then we're also going to continue down. Same situation as in the diamond contract. We're going to go down and test the August 2015 lows, and I don't think we're going to hold there either. And taking a look at the QQQ, which is the NASDAQ ETF, similar situation here. We were moving up, reversed to the downside. We were already at the lows for the last, we're already at the lows for the last 6 or 7 days. And you can see here that all we did was alleviate the oversold reading in the short-term oscillator. So we've got plenty of room to move to the downside. So I think this next level at 99.50, this is a closing price. So this next level of 99.50 is where we're going to just slice through to the downside. And then again, we'll be back to the, or what brings it next is the target of the August lows as well. So again, all it's done is alleviated the oversold reading on the short-term oscillators. You can already see in the long-term oscillator, we actually already moved down below this previous low. So we're already building momentum again to the downside. And so I don't see anything that's going to change this viewpoint until the market gets to a point where it just capitulates and everybody finally says, I give up. The way we can take a look at that is looking at this VXX trade. I did place this ETF on a buy a few days back. We got in roughly at the 25.57 level, and so you can see the oscillator here is going sideways after this big run up, and this market also reversed today. It was going down, and in fact this dot had been going down as well, and then by the time the close occurred, the dot is now moved back to the upside. So let's take a look to see where the short-term oscillator is at. When I came out and put a buy on the trade, we were oversold. We were moving into the oversold level. We had been here a couple times, more than a couple times. We had been here over the last 2 or 3 months in these levels, and then we turned right back to the upside. So we took a buy position, and we're now moving from oversold. Now we're going to start moving up to see how far we can get. And here's my expectation, was that we were going to not only see the price move up above to the 27.50 level, but my expectation is that we're going to get to the $31 level before we would look to close that trade. So here we are in the 27.50 level. I'm expecting us to be able to get up to the $31 level roughly, and we would look to start closing the trade. So again, the oscillator's got plenty of room to move to the upside, and this is what I'm using as to determine the fear level. Right now, I don't think that there was a whole lot of fear. I think everybody's in disbelief that the Fed didn't come out and rescue everybody, and now we're going to start really seeing some of the fear start building up. And my expectation would be is that we'd see it here in the VXX, as well as the VIX and some of the other inverse ETFs I don't really see a lot of fear in the market overall. The other way we can tell fear is in the gold ETF, which is GLD. We took a position in GLD at the 105. I think it was 105.57, somewhere in this area here, just under 106. And you can see we're moving up into the overbought area. But again, I think we're still going to continue to rise even higher. And I'll show you the long-term oscillator in just a moment here. But what this is showing is that people are losing confidence in what the Fed is doing, and therefore they're looking for the safe havens to go into. And gold, even silver, are the safe havens, as well as the TLT ETF, and also the we'll go over the 10-year note as well, showing that my expectation is the fear will start rising with the market, and money will start moving into the safe haven areas. And I do think that gold is considered a safe haven, although it hasn't for quite a long time been an area where people have ran to when there's a lot of fear. But I think that the fact that people are losing confidence in the Federal Reserve, traders are losing confidence, I think gold now comes into play again. And so I expect gold to continue to rise. I'm looking at the 114 area, so we're looking for prices to get back up to the closing price on October 15th time frame. And so again, this oscillator has room to go. Let me switch over to the long-term oscillator. And this was the real reason that we got into it to begin with. The long-term oscillator had crossed above the zero line 6 days ago. And I had said, after it crossed above the first time, or the first dot, I had said that we were going to look for a pullback, and then that would be the time to enter in. We got a little bit of a pullback, but it didn't really pull back very much. And so again, we went ahead and got in right at the 105. It was like 105.50, 57 area. And so now it's starting to accelerate to the upside. You can see the dots widening here. That means that momentum is increasing to the upside. And so I expect the price to be able to catch up to the oscillator here. And again, I'm looking at the 114 price range before we would look to exit the trade, or at least put some stop losses, some tight stop losses once we get up here. But that was the purpose of getting in this trade to begin with, is we got to cross above the zero line in the long-term oscillator. And so far it's working as expected. And so I expect to see more movement in gold over the next, probably over the next 4 to 5 trading days. And I also mentioned about the 10-year note. Let's take a look to see what that's showing. The 10-year, you can see here, has been moving down. These dots are still wide, which means it's still continuing to gain momentum to the downside. And we're right here at the 2% range. And we've been down here a few times since September. And yet the oscillator has continued to move down. You'll notice here, when we were down in the 2% range back in September, October, November, or September, October time frame, the oscillator had already been going sideways, moving up a little bit, coming down, going sideways, and then eventually started to turn back up. Here, we have not had that type of movement yet. We've had price movements to the upside, but the oscillator hasn't moved sideways or moved up. And so that tells me that money is still moving here, again, as a safe haven trade. And so I expect that the 10-year note is going to continue down in price, interest rate wise. And so let's take a look to see where we can probably get to. before we see a bottom in rates. So you can see we're already here in these closing prices, 2% range, and I think we're probably going to get down. Actually, I have to go a little bit longer. System's a little slow tonight. So we're probably going to get down in the 1.9 area in terms of price. And if we have a really big down day in the market, or a couple down days, we can certainly get back down to this 165 area in terms of interest rates, which would be a pretty big move. So first thing is I'm looking at the 1.9 area here, and then from there, if we shoot past that, then we're definitely going to be down in the 165 range, from what I can see at this point. So let's shift over to the long-term, or excuse me, the short-term oscillator, and take a look to see what that's looking like in terms of whether or not this move in interest rates is oversold, or where it looks like it could be going. So you can see here these moves in interest rates to the upside about 5 or 6 days ago. What it did is it alleviated the extreme oversold position and moved up. And now my expectation is that we're going to see rates continue to move to the downside, which means the oscillator is most likely going to turn to the downside. And that's going to take rates even lower, hitting the targets, the 1.9 target first. We've got plenty of room in the oscillator to be able to move, to turn down and move to the downside. So it looks like, as bad as the market has been this year so far, and as bad as all the technicals that have been broken to the downside in terms of advancing stocks, declining stocks, I guess what I'm saying is, with all the technical damage that we've had, we still have not seen fear get to the levels that it needs to get to be able to bottom. And I think that that's what is now coming. And everything appears to be set up to be able to have people run into bonds, run into gold as the safe haven trade. And that is while the Diamond ETF, the SPY, and the QQQ are moving to the downside. And that'll bring in the level of fear that we need to take the VXX up and also get a bottom where nobody wants to get in any longer. And that's the point we need to get to. So that's an update for today. And we'll continue to see how this moves over the next couple of days, and I'll continue to update you. Thank you. Have a good evening.